The third topic is sanctions. Sanctions are restriction or bans placed by the government or international bodies on people or companies or banks or even on countries due to terrorism or money laundering, political reasons or illegal activities. Means those countries or those companies are restricted, prohibited, or there are some restriction on them, so that is called sanction. Here in KYC, sanction means not approved, so sanctions means prohibited. Okay, so financial institution must not do any business with the sanctioned entities, no matter whether it's a company or a country. If it's a sanctioned country, you should not directly do with any financial transaction along with them. So if they do, heavy fines you have. If company does along business with them, they have to ending up with paying heavy fines or legal action or license risk. So what are the type of sanctions? Comprehensive sanctions, entire countries are restricted. For example, North Korea, Syria, Cuba, and Ukraine. These countries are comprehensive sanctions. Entire countries are restricted. So second type is targeted or smart sanctions. Specific individuals or companies or some ships or banks, maybe Lawrence Vishnu, I would say. And third is sectoral sanctions, specific industries, for example defense, oil, finance. There will be more chances of doing these money laundering activities, no? So that comes under sanctions. So where do banks check sanctions? Like where? Banks screen customer names against OFAC list for USA, UN sanction list, EU list, UK HMT list. So local countries list, for example RBI, SEBI in India, SEBI. So these are the places where a bank should check the sanctions. And screening happens should for all the entity names and leadership names and also in onboarding time and periodic review also. Screening has to be done on the company's names and leadership names. And every transaction, especially cross border, when they are cross border transaction will be happening, you have to cross check. So one practical example, I would say that customer named as a Mohammed Yusuf Khan try to open an account. So system screening shows a match with the UN sanctioned terrorist Mohammed Y Khan. So bank must verify whether it's a true match or a false match. If it's a true match, immediately we should reject that or file a STR or SAR. That I will tell in the further videos. And freeze asset if required. Higher management required and compliance is required and legal team will be involved if in that case. So one important thing in sanction are not negotiable, unlike PEP or high risk cases. You cannot approve a sanctioned person even with EDD. If you have done detailed investigation also, analyst cannot approve any sanctions and must report to the authorities, and KYC should be clear and no transaction if that account got freezed. One interpretive I would give that what is the difference between PEP or sanctioned person? PEP is a high risk but business is allowed with EDD, enhanced due diligence. Sanction business is not allowed, blocked completely if sanctions